she's still been working, obviously, just from home and everything like that, but she's good. So let's dive into it here. So yesterday, the market opened up and ended up closing down. It kind of looked kind of ugly the last hour of trade, where it just looked like things were going to start heading south. And today, the market looks like it's going to looks like it's going to open down. Looks like it could be kind of a uglier day in the market. I don't know. Did you guys see Jeremy Graham's comments at the
Grantham? Yeah.
How do you pronounce his last name?
Grantham.
Grantham. So
I used to cover them back in the day. That was one of my customers, and they were a deep value type investor, and they always hated the market.
Yeah, I saw that, and I kind of made me more bullish. I think that guy's kind of out of date.
Well, the one thing about when you listen to these guys, no one ever says, what would you do? And he says, well, I would be less than zero in the market.
Which means short it.
Short it. I've never heard anyone say that before.
So what's his game plan to accumulate wealth? I don't get it.
He's probably short the market. I mean, a couple of things. First off, it's important to acknowledge, and I know we've been talking about this a lot, that these big-time hedge fund managers come on TV and they paint a narrative that's going to benefit them. It's tough to trust what they say because they have their own agenda. So the first thing I did was looked up that guy's portfolio through that subscription service I have, Guru Focus. And, he sold most of his positions at the end of March, which was the absolute low point in this market. So that guy got out of the market, and since then it's rallied in such a big way, and he probably really wants to see things come back down so he can get back to work. I think that's part of it. The other part of it is, according to what I was reading, that guy has predicted the different asset crashes that have happened throughout the last 20 years. Sounds like he called the dot-com bubble. It sounds like he called the 2008.
Well, I feel like when you have a bold prediction like that every year, you're bound to make some dominant calls. Like I look back, that guy's always negative. So it's not like he was like, oh, well, look at this guru. He's always been saying that, painting this picture every year.
Hey, he's a really smart guy, and he's a real diehard environmentalist, and has spent a lot of his free time dealing with the environment and how to fix things that are, in his view, really broken in the world. So, he goes on a different track than most people. And plus he's almost, 90? I don't know what his age is, but he's probably not caring much about the market. He's more interested in how he can affect the world.
Exactly. Everyone has selfish tendencies. That's why we're all on Earth, or we wouldn't be there. Seriously. Even when you look at Bill Gates, like looking at what he's been doing with bringing in money and, the whole movement around the pandemic, it's worked for his narrative. So anyway, when you even think about like really rich billionaires and how they look at the world and the market, it's in their best interest for everyone to be on even keel playing field so no one catches up to them. And it's survival of the fittest. Think about it. So,
but one interesting note about Jeremy Grantham and that firm that he ran, Grantham Mayo, when you would go up and visit the firm, they wouldn't even have a picture in the lobby because he didn't want to spend the money on furniture or furnishings.
I like it.
So when you went to some hedge funds, it would look like you were in a palace, and you would go there and you felt like you were in a university cafeteria.
That's the guy I'd want with my money, though. The dude that's all cutthroat. I'd be like, all right, this is phenomenal.
Look, there's a lot of people that have a bearish view right now, and if you read their reasoning, you can't argue it at all. What they're saying is way more valid than any bull case you'll hear. And the bull case is essentially, don't fight the Fed, don't fight the Fed, don't fight the Fed. I don't even know what that means. I mean, everyone's like, oh, you go to bed, the futures are down, you wake up, the futures are up because the Fed gets to work. It's not like the Fed's buying stock. So I guess, Dad, my question is, how far does it really go? Because at the same, like when you really read into the bear narrative, what they're saying is at some point, valuations matter. And right now, what's been happening and what started happening in 2008, and this just continued it and made it even worse, is we're creating a bubble based on debt. And companies just take on more debt in order to pop up their assets. And then whenever money gets cheap, they get even more debt. So that's the world we're in right now. Companies that are just issuing.
Well, it's not only the companies doing it. The Fed has allowed that to go on, but it's our country. I mean, we basically built up debt to the point where if we were anywhere else in the world other than the United States, which is still looked up to by most of the world, we would have a currency that would be in deep shit. And at some point, a lot of people believe that this will haunt us and it has to be paid back. And if it's not, the result is a very, very weak dollar.
And how paying back, let's be realistic here, how would that happen?
Well, to me, the only way that it eventually happens is because inflation is so high that paying it back is easier. And inflation being high probably means a very weak dollar.
So what, like, if that were to happen, and I read something else yesterday of one of these top Yale economists basically coming out and saying that no doubt the dollar is going to fall hard and fast and somewhat soon, where you'll see it go down to, 75 instead of $1. And once that happens, there's no going back. And if you're on the other side of that and you just think that because things have always gone up, they're going to continue to go up, I think that's a really careless way of looking at things. And, people who are looking at stocks that in the last year have performed 10 to 20%, and therefore they're using it as a trend of stocks that just always go up. That's just not how this game works. And I think that that's going to get people into a lot of trouble if you're starting to be in the camp of everything just goes up. There's no chance anything comes down.
You're absolutely right. I mean, it's a very hard thing to figure on what is going to cause the dollar to finally get much weaker. Now, we can go through periods where the dollar's down 10, 20, 15, 30%, let's say. We've been there before, but it still is the currency of the world. And as long as it is, it's almost like we're the best of the worst. We've talked about this before, where every currency has got problems. So as long as you're comparing currency to currencies, you're still going to be okay. But, Michael's always talked about Bitcoin, and I've talked about gold. These are what people go in when they're afraid of the currency, and they're looking for something to protect their money.
When you say that each currency kind of has its own problem, let's talk about China for a second. Well, what is the problem there?
Well, I mean, we don't even know what the problems are in China. We know that they've built cities that are completely empty. We know that their banking system is, have made horrendous loans for years and years. And we don't know how bad their situation is. It's really difficult.
I don't think China, that's part of the problem with why I don't see, as you guys know, I think they're in deep shit long term as a power. So that's why I know you brought up India yesterday. There's definitely some interesting things going on with that.
Yeah, but the one thing, whoever has the population at the end of the day usually has the power. And India and China obviously have much bigger populations than we do, or anyone in Europe or Russia.
But as we know, sometimes that's not necessarily a benefit.
No, but when you really kind of sit back and look at the trends of what are happening, I personally look at China as a country that's relentlessly trying to be the number one power in the world. And they almost are going about that in anything's fair game when it comes to China trying to become the number one nation in the world. And then I kind of look at the trend that we're on, and it's almost the opposite trend. it's almost like there's enough complacency in our country where there'd be enough people that would be completely content if the United States was a fraction of what we used to be. And it seems like some of the interest that has always been to protect the US dollar, to protect the assets, to protect this country and make sure it's the number one country in the world, not only financially, but as a world power, it just seems like that isn't as popular of an opinion anymore. And
I mean, that comes down to the dollar being the currency used all over the world at the end of the day. So that's what we're talking about here, is being at the, the helm of the world order. It really revolves around the currency. When you think about it, everyone isn't using the yuan or the yuan, however it's pronounced. Seriously, like that's really what this comes down to. And I was talking to Nick about that the other day, the notion of the dollar going down in credit, where it's not looked at as the safe haven in the world.
Right. But the dollar already was, well, the U.S. government was already lowered a couple of years ago from the greatest rating to a slightly lower rating, which no one ever thought would happen, and it didn't affect the dollar. And the reason it didn't affect the dollar is because what we just talked about.
Well, yeah, I don't think there's an alternative that's even close to sensible. That's really what we're talking about.
And that is not a reason to be comfortable.
No.
Because something eventually will happen, whether it be us losing power worldwide because we're more insulated or something else happens. I mean, we all know you shouldn't continue to have higher and higher debt and get away with it. And, one of the reasons we've gotten away with it is because rates are so low. We almost can't afford for rates to ever go up.
And can you talk about Japan for a second, how they went through that whole deflationary period? Like, what's the scare of that? Because I've been hearing reports that that's a possibility.
Yeah, I mean, it's something that we don't want to do with negative interest rates because it's hard to comprehend. Why would anyone buy a 30-year bond if at the end of 30 years you have to pay?
They wouldn't.
You put up, you put up 10,000 and you get back 9.
Doesn't make any sense. But yeah, I think the thing to keep in mind, and Mike, you're always a big believer of this, is nothing lasts forever. And I don't want to be like one of these doomsday guys, but what I will say is, and what we've seen from playing the market aggressively since 2016, when the tide changes, it changes fast. And it changes too fast to the point where if you don't prepare yourself for some sort of correction, whether it's a crash, correction, whatever it might be, it's not like you can kind of then prepare while it's happening. It happens so fast that you're sitting there and you're hoping for some sort of pop to be able to reevaluate things and things like that. So, I think it's just important to keep in mind that what's been going on since March is it's been very, very easy. And I don't know, Dad, does this strike you as a healthy market with the way it's been acting the last couple months?
No, but I almost feel like we haven't had a healthy market for
over a decade,
well, more than a decade. And I just kind of got used to it like everybody else. You get to the point where you just kind of throw in the towel and play along. And that's why I personally have never gone 100% into the market. I feel like there's something around the corner. I'm never comfortable. So basically, I've been wrong for a decade. I've been in the market, but if you could look back, you would have been in the market with margin, and take a 10-year vacation. But it feels very scary now. But it always feels scary.
Yeah, and isn't that though, when it feels scary, that's not necessarily a bad thing?
Yeah, but there is, when you look at the fundamentals, you do get scared. I mean, we can all say, well, obviously, if we're all saying it's scary, it's not going to go down. That doesn't have to happen. And
also to add to that, it's not like everybody right now is looking at this market as scary. Most people are looking at this market, and everything they touch within a few days goes up and turns into a profit.
I think everyone's an opportunist these days. They're more looking to make a quick buck. I don't necessarily think a lot of these people look at the market as healthy. They're just short-sighted and not even thinking about it.
But, you know, the reality is that taxes are going to have to go up because of the predicament we're in. There's no question that the next administration, whether it be Trump or Biden, is going to have to raise taxes.
And let me ask you another question that I was thinking about yesterday. When a big reason right now that you keep a lot of positions for over a year is capital gains versus just regular tax. Yeah. And there's been a lot of chit chat about capital gains applying to all gains in the market, whether it's within a year or after a year. Doesn't that drastically change the dynamics and make the market even more volatile than it is now? Because all of a sudden people like you aren't looking at it like, oh, I'm not going to sell this because of tax. I'm going to wait a year and things like that. All of a sudden, it doesn't matter whether you sell in a day, you sell in 3 years.
To me, what it'll do is it'll create tremendous selling. If that is the policy that is talked about it, you know, before the election, and if they think Biden is going to win, they will sell off the market, you know, leading into the election and right after the election. Because people that have capital gains are going to want to get out by the end of the year if they know they're going to have to pay higher rates the following year.
Yeah, so that's a concern of mine. I will say yesterday, like I was basically all in on margin until yesterday. And yesterday, midday, when the market was up a little bit, something inside of me was just like, you don't want to go to sleep like this anymore. And now I unloaded a lot of my positions. Don't get me wrong, I'm still super long and bullish on the market, but I definitely now have way more liquidity for moving in and out of things, for day trades, for just if there is a massive dip. And part of the reason I like being able to maneuver in and out of things in a given day is a lot of the times the big collapses, like you wake up to them. You wake up and the market is down huge. And then it opens up and it just turns into a bloodbath. And I almost feel like you could, and again, I'm not saying that day trading is better than long-term trading or swing trading, but in this environment, there's something to be said for it because you can kind of see the pulse that the market has in a day. And you could do some things in a couple hours and make your money in a couple hours, whether it's shorting or whether it's buying a stock, instead of going to bed almost with your fingers crossed that that's not going to be the night that the market crashes. Because that's almost what you're doing now. If you're all in on this market, you have a lot of hope that whatever is around the corner, because I love the saying, bulls make money, bears make money, pigs get slaughtered. I've seen since 2016 when I started getting aggressive in the market, that's a fact. If you're long on the market, you'll make money. If you're short on the market, you'll make money. Like they both have their moments. It's the people that just never sell and never take profits or never close their shorts that just get flushed out of their positions because they always think that it's going to go in one direction. So,
but I think like we talked about yesterday, there are certain stocks to bank on going in one direction and holding down the fort with, the anchors, where even through rough times, they're going to end up with the gold at the end of the day.
So yeah, but that doesn't mean like an Apple can't come down to, you know, under 200 when right now it's
like sure, if you're willing to stomach the rides, it's one of those things. Apple can cut in half in the next 6 months. Who knows? But what's going to happen?
A lot of that stomaching has to do with the reality of capital gains, because if you do sell it, you know, you need to think to yourself, well, this thing is going to go down, let's say 30, 35%. And if it isn't, I shouldn't sell it.
Well, Dad, like you were telling me, though, it's a good problem to owe a lot of taxes. That means you've made money. So I'm in the mentality now. I'm done.
Harold taught me that.
But let me tell you,
Harold, I don't even want to be owing taxes. I want to be the guy that's making money without paying taxes, but that doesn't exist.
Look, the only counter argument to that, and I'd say it's a pretty big one, is if you're paying a lot of taxes, it means you made a lot of short-term gains in the market, and it's possible to pay a lot of taxes. And when you're coughing up those taxes, you're massively down on the year, even though you took a lot of short-term profits. And that to me is the worst situation ever, where, you know, right now trading in and out of stock, let's say you got 150 grand profits for the year. And then all of a sudden, the next couple of months, the market turns into an absolute bloodbath. Those short-term gains are locked in. You're paying.
Well, yeah, if you're being naive and way too deep in margin when shit hits the fan after taking those profits, sure. But I think that depends on how you're set up. I'm in the mentality when I'm doing that, again, it's with stocks like we were talking about yesterday. Don't be playing that game with stocks you want to hold on to. I'm only cushioning on dips, those behemoths, and then getting in and out of stocks I don't plan on holding anyway.
You also have to put aside the money you're going to owe for taxes. So you have to actually set up a separate account and put that money in there, and it's not yours anymore.
Yeah, that's Bitcoin for me. While it keeps going up, I'll just cash out a little bit for taxes.
So let's talk about some stocks here. First off, let's talk about the cruises, because we never really do that on here. And, you know, Carnival had their earnings this morning. Looks like there's going to be a sell-off there. And Norwegian had their earnings yesterday and also had a sell-off, or it might have been 2 days ago. I think it was yesterday, though. And they didn't really say anything that the world didn't already know. It was, you know, I'm wondering, Dad, how are you looking at the cruises?
Well, look, they all raised money to survive, and that's all they could do right now. So if they cannot get moving by the fall, I would think there's a couple that are going to be in big trouble. And the next time they go to the well to raise money, it's going to be harder.
I would stay away from that stuff because of the fear of the uptick in the fall again with the weather. Like if you're a cruise line, you have to be very scared of the notion of seasonality, where it's like, oh, well and good over the summer. Who's actually booking cruises, even in Dad's age group? When you think of a lot of cruise goers on these ships, sure, you've got the young guns, the college spring breaks, but the brunt of them are families and older folks when you really think about it. And that's where I am staying far away from that.
I think Carnival, you know, a lot of their lines cater to the younger crowd. So it's a little different than some of the other ones. Or, Disney's more family.
Royal Caribbean.
Yeah, but you know, it really comes down, is there going to be a vaccine? And it's a race. Can they survive until then? And I think their thinking is that if they can get financing, even at 11, 10, 12%, which sounds outrageous to, you know, have a bond that you have to pay that kind of interest, that if things get back to normal, they're going to be able to refinance at a much lower rate. So as bad as some of these bond deals that they're doing are, that's at the end of the rainbow that they're going to be able to refinance. So it all comes down to me, either they're going to have to test everyone coming on board and not let anyone off, or, you know, they're going to have the vaccine before.
When you talk about that, though, companies that we could take advantage of stock narrative wise with taking temperatures, entering places, who's really the winner there? Because we're seeing that's becoming commonplace with a lot of.
I don't know what temperature does. To me, that's a joke. I mean,
well, I agree, but there are companies that will benefit greatly from that joke.
I know, but the point is, I mean, Danny's got the virus and he has no temperature. So he could basically go anywhere he wants and infect thousands of people.
I'm not saying it works. I'm more talking about the notion of it being produced.
No, I know what you're saying, but my point is most people are going to see through it and not feel comfortable. Oh, they took my temperature. Now I could be in this museum safely. No one's thinking that.
But they're going to have to get their temperature.
And to go back to the refinancing and all of that, that kind of goes back to our dollar discussion where, and this was something I was reading about yesterday, where everyone's like, oh, a weaker dollar is good for assets and good for the stock market. But at some point, if the dollar gets too weak and you have a lot of markets that are at this point where they're at because of refinancing deals or because of debt that is in US dollars, if all of a sudden the dollar is worth 75 cents instead of $1, I don't see how that's good for the stock market.
No, I mean, at the end of the day, inflation is bad for the stock market. But what we're talking about are tame moves in the dollar, down 10%, down 15% over time. If you start seeing it drop below that, and going towards down 50% or more, there will be panic by, different groups of people that can get worse.
So is there a value that you look at? Like I saw one of the respected guys that I follow closely kind of made this comment where he was like, if you see the dollar drop below 94, watch what happens. Like in a way where he was like, if the dollar gets below 94, people aren't going to like it. And they're going to get
what happens. Let's go through that. What happens?
Well,
a sell-off.
It depends on the company. If the company is buying its stuff from a strong currency, then they're paying more, right? So
it's a belief, like we always talk about, currency is a belief system. So it comes down to what are people behind, and with conviction. That's
right. But the reality is, though, if you have dollars, just think about if you go on a trip to Europe, if the dollar is strong, your buying power is great. If the dollar drops 50%, it's going to cost you twice as much to go on a European vacation, and everything you buy there is going to be more.
So, Dad, are you thinking about getting some Bitcoin?
No.
But I'm glad you just brought that up, because that kind of brings up my next point, and that Jeremy, how do you pronounce his last name?
Grantham.
One of the things he said yesterday when they were trying to dig out of him which stocks he actually likes, he was like, export companies in the United States that export. And so Dad, throw a couple out there. Like, which companies is he specifically talking about? Maybe we could.
Well, I don't know what he specifically is talking about, but any company that produces goods here and sends them overseas, it'll be easier for those countries or people to buy them if the dollar is worth less. Right.
So is that like one of the things, like with the trade deal with China with like soybeans? Are we talking about that? Or are we talking about actual product versus produce? Like, what is there an example that comes to mind?
Well, let's say you make tractors here and all your parts are here, because you got to think about the actual parts of what you're exporting. So you need everything to be made in the U.S. And then it's cheaper for other people to buy it because the dollar is weaker. So that's one of the issues, is a lot of the products that make the things that are made in the United States come from overseas. So agriculture is a good example because it's all here. So it's cheaper for overseas to buy it if the dollar is cheap.
So are there some safe havens if you were in the camp of somebody who thinks that, we are creating an asset bubble and the dollar is possibly going to go down along with stocks? What would you be doing?
Well, I mean, if you had the right account, you could actually short the dollar. You could play that directly rather than try to do it through companies. So that would be the ideal way to play it. The question is, what are you shorted against?
Yeah, I don't like the whole shorting game. I'm an optimist. Instead of shorting, how about
you're not really, what you're really doing is you're buying, let's say, the euro, and that makes you short the dollar. So you could look at it, you're buying New Zealand currency would be a good way to think about it.
See, here's my attitude, guys, with this. It's paper. Digital, the reason I'm bullish on Bitcoin, we're all on E-Trade or Fidelity, making all these trades. It's all numbers. How many times are you actually holding printed cash anymore? That's where I just think things are changing with that sentiment. I know we have to do our picks here, though. Dan, what are we working with today?
For another day, the Bitcoin talk.
Yeah, we will get to that. I'll bring up, I know I've brought them up before. I don't know if I'm going to do anything with them, but I just want to remind people that are tuning in that if they are looking to play the market the other way, the best way I've found is SPXS, which I've gotten burned on because it's been a hell of a bullish run. I currently don't own any, but SPXS is going to do 3 times the opposite of what the market's doing. So if the market is down, you're going to be up 3 times the amount the market's down. So if the market's down 1%, that stock's going to be up 3%.
So good hedge.
Yeah, but it's the S&P, so it's not.
Yeah, it's just the S&P. Which, if you are kind of paying close attention, the S&P is definitely the sector that is probably under the most amount of stress. It's filled with the most amount of companies that are not doing well and that are at risk of going bankrupt and things like that. The NASDAQ's been up 15 out of 18 days. The NASDAQ's filled with companies that are just powerhouses. And I'm not saying the NASDAQ at some point isn't going to come crashing down, but those companies at least aren't built up on debt. So SPXS, I mean, you know, I might try and day trade it a little bit today. I don't know. Yesterday, I made a nice little day trade on Penn, which was the first day trade I made in about a week. Mike, I told you what I did there. I told you too, Dad.
Yeah.
I'll be monitoring them because I feel like I have a pretty good pulse on them. So
Penn's a great day trader. That's phenomenal for day trading.
Yep. Dad, what are you looking at today?
Survival, I guess. No, most of my, hardcore positions are down today, as you would expect. Not a lot, but the banks have just gotten really torn up. And I'm concerned about that because that's always the backbone of the market. So I'm going to keep a close eye on those today. As far as a day trade goes, I kind of like playing one of the airlines if they go down far enough for a day trade. I think that would be fun to do. And they will get hit off of this Carnival cruise and the market.
So loading up more on Sabre?
I don't know, maybe. I don't like day trading Sabre isn't the best one.
Not day trading it, but adding to the position.
I'd rather play one of the airlines. To take your pick, they all move together.
And I'm going with Zillow. I'm not in at the moment. I'm going to be a long-term holder starting maybe today, maybe tomorrow. I've had some good internal conversations with close confidant friends. That company is going to the moon. And there's no doubt about it. This whole pandemic, they're an advertising and house flipping business now. So they have two revenue models, and their CEO is an absolute in a way that he understands how the world's moving with housing. And you could kind of look at them as the Amazon of real estate.
As long as there's cash out there, right?
ZG. It doesn't matter, Dad. The value of the property is irrelevant.
And
it
is relevant because if they're buying a bunch of property and the value's cutting.
No, again, house flipper. They're an advertising model and a house flipper. So how much it's about the flip, being able to transact quickly in and out of things for people where they can buy and sell. So that's where I'm very big on them. I think you're going to see them being a winner on another level from all this. And they really have a monopoly. When you think of where you go to buy a house, it's Zillow.com.
I've made good money on Zillow. I like that stock. It definitely moves a lot high.
But if you want a good long-term anchor that's going to give you a ton of returns the next 5 years, that stock is it.
And let me just add, when you said you're freaked out about the banks because they haven't been acting well, that could be a kind of overall picture of where things really are, because the banks are going to keep in mind the stock market. And I'm telling this to the viewers, you guys obviously know, but the stock market trades in the future. It predicts what's going to happen. So anything happening isn't based on what's happening today. It's maybe what's going to happen in 6 months in this market, maybe even a year and a half. And the banks being so beaten down is a sign that there's a lot of bankruptcies coming down the funnel. And in the next 6 months, you're going to see a lot of companies go bankrupt, and that's going to affect the banks. And, that's just something to keep in mind. Like, things aren't as gravy as the market is making things look like just because the Fed's been coming out with all these positive comments. Like, at some point, they're going to have to sit back and let things do what they're going to do. And, that could be an ugly day. So you just got to be ready.
Stay loose, right?
What was that?
Stay loose.
Stay loose.
All right, well, let's make some money.
Cool.
Take care, everyone.
Bye.
Bye.